This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. OPEC on Thursday cut its forecast for growth in world oil demand in 2022 for a second straight month, citing the impact of Russia's invasion of Ukraine, rising inflation and the resurgence of the Omicron coronavirus variant in China. In a monthly report, the OPEC said world demand would rise by 3.36 million barrels per day, BPD, in 2022, down 310,000 barrels of oil per day from its previous forecast. The Ukraine war sent oil prices briefly above $139 a barrel in March, the highest since 2008, worsening inflationary pressures. OPEC has cited suggestions that China, with strict COVID lockdowns, is facing its biggest demand shock since 2020 when oil use plunged.
Pressure on Europe to secure alternative gas supplies increased on Thursday after Moscow imposed sanctions on European subsidiaries of state-owned Gazprom and Ukraine stopped a gas transit route, pushing prices higher. Russia imposed sanctions late Wednesday mainly on Gazprom's European subsidiaries including Gazprom Germania, an energy trading, storage and transmission business that Germany placed under trusteeship last month to secure supplies. It also imposed sanctions on the owner of the Polish part of the Yamal-Europe pipeline that carries Russian gas to Europe.
Moving on to the top news in the energy sector.
Oil prices fell on Thursday in a volatile week as recession fears dogged global financial markets, outweighing supply concerns and geopolitical tensions in Europe. Brent crude was down $1.92, or 1.8%, to $105.59 a barrel at 12:02 GMT. WTI crude fell $1.79, or 1.7%, to $103.92 a barrel. Oil prices are under pressure this week, along with global financial markets, amid jitters over rising interest rates, the strongest U.S. dollar in 2 decades, concerns over inflation and possible recession. Prolonged COVID-19 lockdowns in the world's top crude importer, China, have also impacted the market.
At least 3 vessels carrying crude oil from U.S. emergency stockpiles sailed for Europe in April as refiners there scrambled to replace Russian crude supplies, according to U.S. customs data, ship tracking, and an industry source. Releases from the Strategic Petroleum Reserve (SPR), since Russia's invasion of Ukraine were designed to counter supply shortages and stem fuel price gains. A release last fall was aimed primarily at pushing down rising U.S. gasoline prices. The Biden administration last month added 180 million barrels to 2 smaller releases since November from caverns along the U.S. Gulf Coast. The United States has not prohibited exports of SPR oil and some analysts believe the exports will grow.
Next, we have the top news in metal markets.
Copper prices fell below $9,000 a ton on Thursday for the first time since October and other industrial metals tumbled as traders worried that a slowing global economy would require less metal. With inflation surging and interest rates rising, growth fears also pushed down oil prices and stock markets hit a 1-1/2-year low. The dollar, meanwhile, reached a new 20-year high against a basket of major rivals, making dollar-priced metals costlier for buyers with other currencies. Benchmark copper on the London Metal Exchange (LME) was down 3.6% at $9,000 a ton in official trading after falling as low as $8,938. Prices are down 17% from a record high of $10,845 reached in March.
Gold fell on Thursday, dragging other precious metals along, as the dollar scaled a fresh 2-decade on renewed expectations the Federal Reserve would stick to its aggressive rate hike roadmap. Spot gold fell 0.3% to $1,846.56 per ounce by 12:44 GMT. U.S. gold futures were down 0.5% at $1,844.30. Gold again has failed to garner momentum to the upside, despite pretty epic issues in the global economy, like multi-decade high inflation. What seems to be weighing on gold though in particular is the dollar, independent analyst Ross Norman said. We will now look at the top news in the agricultural sector. Consultancy Strategie Grains on Thursday lowered its monthly forecast for European Union soft wheat exports in 2021-22, saying Russian shipments had held up better than expected in the face of Western sanctions over its invasion of Ukraine. The French firm now sees EU soft wheat exports for the season that ends in June at 29.9 million tons, 1.5 million tons, or 4.8% below its April forecast. Moscow's invasion of fellow grain exporter Ukraine in late February stalled Ukrainian shipments and triggered Western financial sanctions that raised uncertainty about Russia's capacity to export grain.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.